What's going on, guys, and welcome back to the channel. Today I'm going to break down a few stocks. I'm going to give you guys my point of view on how I would trade them for day trading, swing trading, and investing. What's the difference between those? Well, it's just the time frames, basically. I mean, investing is more long term if you're looking at it like a few years. Swing trading, it could be from a couple days to a couple weeks. It just depends on the what you're trying to get, the percent you're trying to go after. Day trading is more aggressive, more. It has to be more like micro. So it's like more micro, but it's still the same concept. It's just more micro. But I mean, there's obviously more potential with smaller accounts on day trading to gain, grow an account. But with swing trading, it's the same thing, I guess, in a way, but it's a slower pace. It's just the time frame. That's the only difference. So I'm gonna break down. We're gonna start with day trading. And what is day trading, right? So day trading is where you buy a stock, and you can buy it, and at 9:30 and sell it at 9:20, 9:31. That's a day trade. Anytime you trade a stock the same day is a day trade. Uh, so with that being said, how many day trades do I take? I take quite a bit. You know, sometimes I don't have to take as many because it's going in my direction the whole time, and I'm just riding that wave. And a lot of times it's just choppy, and I'm just it's in the back of my head all the time. I cut my losses short, so if it's going against me right off the bat, I always just cut my losses short. I don't like being in the red. I like to stay in the green, and that's how my strategy's always been: stay in the green, and if it's not going my direction, I'm out. So let's break it down here. I already drew some lines. I drew some arrows to explain this. Let's start from the very beginning. So let's just say, for example, it's 9:30, right? The open, and you don't have no. Obviously, at the beginning, you have no idea what direction is gonna go. So what you do is you give it a little, you give it a little bit of time, and let the pattern start to form, and if once you get your first low, right, right here in this area, you get your first low. You connect these two lows, right? And so now you know that somewhere around here, the next low is if it comes down, you would take advantage of buying. You don't buy it right off the bat, but you have to wait until you have like a little bit of a curl, so to speak. So, and see, the top is always going to be. I mean, it was not. I mean, this top was built after this low, so you probably wouldn't have known what the top was. But the top would have been somewhere around this neighborhood because of the open. See, pretty close, right? So now that you have your bottom low and your top, you connected them. You made the lines. You just extend them. So at this point, you're like right here, like this. You draw your two lines here, and you draw two lines over here. I mean, you would draw this one like horizontal first because you don't know which one is the other one at that time, right there, right? You would draw it like that. But we already know where our top is at. So let's say we would have jumped in here at long. Long means, to the upside. So you jumped in here, and let's just say you keep climbing, and then you get to that top. See how it got rejected right there? Came down, tested the EMA, and then it started climbing right back up, right? But then we found our real top. Our real top was right here. See? Once you connected that next top with this top, it gives you an extended top up here. So how do you know when to go short? For example, if you wanted to go short on this, you wouldn't have gone in. You wouldn't have gotten in yet because it was confirming that top became a support. See how I started grabbing the support here, and then it started climbing, and then it just failed to break up to the upside, because if you connect these right here, 1, 2, 3, that's considered a breakout. So if it breaks out of here and gets up here and starts doing the same thing like it did down here and use it as support, then we're going to have another grinding up moment. But we didn't. We've had a false breakout. We came down. We tried to test the support again here, that top before, and then we broke down again. But guess what? We still had our lines from the previous, right? If you see right here, that line was still drawing. So I'm not saying to jump right off the bat, but this would have been the first time it touched that line. Second always has to. Okay, so the first one to me always has like a. It's really easy to, the first time it comes down to that line, I'm almost guaranteed their people are gonna buy it. See how fast they bought it off here? It barely touched it one time. So the second time it touched it twice, 1, 2, and then it climbed up, right? Second time is like, I always feel like the second is like a 60-40. So I always wait for a little bit of more confirmation on the second one, and then it started grinding up, boom, 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 boom. That same top right there. And why don't I just draw another line up here? No, because that to me is considered a false breakout, because this is where the strong resistance is at right there. 1, 2, 3, 4, 5. It tries to break through it, but it can't. It keeps getting pushed down, and then it breaks through it here. If it does a false breakout again, comes down, and now it keeps rejecting it every time. See that? Keeps rejecting it every time. So this is a good time. If you start noticing, you could go short here, because if you start looking at how many times it tries to break out and it didn't, well, there's only one direction next, right? To the downside. Well, that's what I would assume. I would have assumed here from this pattern that it should be grinding down. But the thing is, see this right here, this one, let's see. That would have been 1, 2. I was looking for the third one. The third one, always, if it touches the third one, I always guarantee it's going to break, because the third one always breaks. But when it came down here to the third one, look at this. It never touched it. So that's not considered another pullback. That's just considered a sideways chop, more like a bull flag. See, it's more like a bull flag at that point. See how it's like a bull flag? And then it grinds up, right? But it's still within that channel. See how it's still within the channel? It just like gave it more room to the middle, and then it just starts climbing up, so it could basically have more room for expansion, so there is no resistance. So right there, that's a big, massive move. And that's where usually where a lot of shorts get squeezed, would have been a 1%. And then, see the third time? This is how I know the third time always breaks, is this is the time it made a false break, tried to test it, it didn't get rejected, it climbed back up. So this could have been a fall. I mean, it could have been a bull trap, because it climbed up, used support, and then it started using the EMA as support, and then bam, dumps, confirms it to the downside, because now it got rejected after 2 red candles. See, when it broke here, it only had 1 red candle, and then the green one climbed back up. So what does that mean? That means that it didn't confirm it. The trend wasn't confirmed. So this one does confirm the trend. Breaks it, confirms it to the downside, and now we start grinding down, right? We start grinding down because of that. So now we're gonna see that line. Now at this point we have no idea, right? I would have been like, okay, well that channel that was going up, it broke. So how do I know where the next support's at? The VWAP is where you would more likely subconsciously think that's where the next support is. But there's another support here. See how it bounced off that support, that old support? I mean, that would have been I'm not saying to jump right on that one right off the bat, because it could break, but you do want to see how slow it's grinding down, and it's like it's taking a hard time to come down. Now, I wouldn't have jumped in here. I probably would have jumped in around here somewhere on the 4th candle, because now I know that it's confirming it every time. And you would have to look at the level 2. The level 2 is right here. And the level 2 is telling you if people are buying the dip. Because as soon as it comes down, people will buy it. Comes down, people are buying it. See what I'm saying? Every time it touches the EMA, if they buy it. So that, I mean, you have to be constantly looking at this level right here. Look at the bids. Look at the asks. Are they buying the ask? So with that in mind, that's how I take a position. I look at the level 2, and if I see how fast they're buying the dip, then that means, that's where I'm going to be buying as well. Because if other people are seeing it, they're buying it for a reason. They feel like there's more upside, and, you constantly got to be, like, checking the level 2. Like, I'm basically watching the level 2 as I'm looking at the patterns and timing sales and everything at the same time. The clock over here, I'm looking at the clock. Every time it gets to, like, 10 seconds, you got to constantly be micromanaging. Basically, that's a death. So, with that being said, I probably wouldn't have jumped in on the first one, waited for the second one. If you only have a limited amount of day trades, then you just gotta let things form out. And in here, you already know that one of your bottoms is here. Your top would have been formed there. So now you're looking for the second bottom. Once it climbs up here, see how people start buying it? See these big green candles? That's because people were waiting for it. They're getting FOMO'd out, so they're trying to jump in fast. And now look, we're just grinding up to the north. And now it's following those lines now. Now this line I wouldn't have been able to have that line right there, right? Because there wouldn't have been enough time. But let's just say I would have had a top right there, right? Because that's how I know I would have had it. I would have had it like this. I would have had this line already, but the other one. Now let's say I wouldn't have that one, because that would have been in hindsight. So I would have had something like that. Something like that. At this point, I would have been like this, right? Oh, it's grinding up. Breaks it. Boom. Confirms it to the downside. Boom, boom. Grind down. That would have been 1, 2. See how it did 3 times, right? It tried to break it to the upside 3 times here. So that to me is like bullish. Once, twice, third time. This right here, I consider a bottom because of the way it's shaped. Now it still could come down, but I'm saying if I'm gonna jump on this, I'm gonna have my I'll wait for something to form like this. I'll jump in and have a hard stop, just in case something like if it breaks, because anything could go against you. But all I'm saying, there's more potential for upside. So now, if we would have went in that trade, you would have found your second bottom there. Your second bottom would have been already there. See? That would have been your second bottom, and you only had your tops over here. See, this is why I'm saying people find that to be a top. See that? It didn't just go through it. It stopped, came down. This is how you know that it's not the top, because it grinds right back up to the EMA and it starts grinding up. And it breaks out of it, and it tries to use it as support here, but it failed. Comes down to the line that we drew. See, now we would have had this line by now. Now, I'm not saying to jump right on it right off the bat. You got to give it a minute. Got to give it a minute. Make sure it jumps over the EMA, and it started going over the EMA, right? But it broke down. But if you would have had your stop somewhere around here, you wouldn't have been stopped out. Or maybe you could have had it down here. It depends on your size. It really depends on what type of size you got. So if you start looking at this, it starts grinding up, right? This is where the big moves come, because now we are using this as support. And now that we have both our tops, we align them. And now we extend them. That's all we have to do now. And see this right here. This is a very important key factor right here. See how it breaks this one right here, and see how this is so similar to the one we had over here. Look, this one right here. See how it's so similar? But this one failed. Okay, well, now that you understand this concept here, see, it tried to break it to the upside, but it failed. But over here, it didn't fail. It grinded right here. Came up, used it as support, falls break to the downside, keeps grinding, keeps using it as support, and what do we get? We get a massive move to the upside then. See that? All this whole time, this top line that we drew, that top that we say was a top, no longer a top, it's the bottom. And now we have a massive move to the upside. So if you're a short and you think like, oh, it's just a false breakout. Well, let me tell you something, buddy. You see this right here? This is a clear example why sometimes it's just better off to cut your losses short, because eventually it can keep on grinding further. In hindsight, everything's easy, but this is right here. This is where it gets crazy. If you're on a short side, now if you're on the long side, this is perfect, because all you had to do, I mean, in hindsight, you could have just bought off here, and that would have been almost, let's see, that would have been a massive, let's see, 4 or 5%. 4 or 5%, it's a lot of money whenever you're trading with a larger account. On $100,000, 4% is $4 grand. So I mean, that's a pretty good example of day trading. Now I'm gonna break it down on swing trading. How I would swing trade this, right? How I would swing trade this. All right, let's break it down a little bit. So we know where our bottom is right now. Our bottom is right here. It's pretty clear, man. Right there. That's our bottom. Where's our top? Right here. This is where is our top right here, right? That's our top. See this pattern? Isn't it so similar to the one we had on the minute one, right? Isn't it so similar to something like here, right? You have a bottom. Now we're testing the top, right? We're trying to go to the top. So we're in hindsight right now. We're basically like right here on the 4-hour chart. You know? Basically right there. Same thing. Same scenario. Right there. Like that. We don't, it's not the same, but it's pretty similar. We're at either the top or we could just keep grinding up, you know? So this is where people don't understand that you have to pay attention, because like if it fails to break to the upside and it come, then everybody's conscious, oh, we got to come back to the downside. We got to test this bottom. But if we come down, test the bottom, I more than likely know it's going to break because of 1, 2, the third attempt to the downside. It's bears are going to be looking at it subconsciously. Oh yeah, it's going to break down. So they're going to start shorting more aggressive. But as right now, bears are scared because this looks more like a continuation. So it's looking good for the bulls. Now, how would I play this? Okay. Maybe on Monday gets rejected, right? We get rejected, come down to the EMA. We start grinding. Somehow or another, we maintain on that EMA. We break to the upside, come down, test the old resistance as support. We start grinding up, and then we make a leg up to somewhere around 118. And that to me is bullish, because then what that pattern is going to look like is going to look like more like a head and shoulders on a 4-hour time frame, which is like, I mean, that could be an aggressive upside move, right? And why do I say it could be an aggressive upside move? Well, because it's the 4-hour chart or the day chart, and whenever you have formed patterns on bigger time frames, the bigger the move it is. So it's the same thing. It just takes longer, but it's big. It's a bigger move. So as of right here, how I would play this, I mean, my chances of I believe it's close to the bottom, and I really think it's gonna either break through it, use the support, and then keep climbing, get rejected, come down, give a false breakdown to the downside, and then starts grinding back up, and then we go to the north. To me, but that would determine that on Monday. Now, if it breaks above this, really aggressive, like a really strong aggressive green bar, now that's where you have a massive short squeeze, because short sellers, they get caught off guard. They didn't expect this to be so strong. And usually when you have moves like that, that means it's super bullish, and it could even break that resistance at 118. It could go all the way to like 120 or 123. Now, if you get a massive move from like 113 to 120, whew, man, I'm telling you right now, then I would see easily 138, no problem. I wouldn't even, I'm telling you right now, I've seen bullish patterns, and the more this is, the aggressive it is, that means it's just, for the long term, it's very, very good. Now, I'm not saying to jump on it if it's like at 120 or something like that. You just have to wait for the pullback and then jump on it. And for investing, well, you're not really looking at it like that. You got to look at it for the long term. So from investing, you have to look at it like more from the weeks, you know? So from the weeks, I mean, let's clear this up a little bit. So, I mean, you know, investing, I look at a chart, you know, it's not in value right now, obviously. I don't know if it's even worth it right now, to be honest. If Apple's way overbought on for investors, way too overbought. But I'm not saying it can't keep grinding, because it always can. But if I was gonna invest in a company, I wait for it to, you know, I believe it'll come down to this eventually. It could come down to this, and let's see, 81. I don't know. Well, yeah, well, maybe it could. See how I did it right here? See that? See that right there? On the top side, and then climb. man. So we could come down to like 80, I guess, on the long perspective, but I just don't. I don't think so. I just don't. I don't see that happening anytime soon because the bottoms are formed now. The bottoms are formed. See that somewhere around there. So, and the tops are formed. So people are gonna be drawing these lines for long-term invest. See that. See now that's more realistic to me right there. This coming down to this line right here and then grinding up. Now, if I was gonna invest an investor, I would wait for this opportunity somewhere around here, like around $100 for the long term, because in a few years, I mean, it could use this. I mean, on the weekly chart, this is not just by days. This is weeks. Um, this it would it's gonna take more than 1 week to break this chart. I mean, this support. So to me, like I'm saying, like to me right here, uh, it is highly important that would be for an investor. And I mean that's just how I see it. You know, I draw my lines, and as an investor, I would get my first position here. Now if it comes down, now if it breaks down and comes down lower, I'll buy some more. But that's because I'm investing for long term. It doesn't even matter if I have a quick loss here and there, but I'm not selling. I'm gonna buy it for a long time. Now, uh, you know, the thing about investing. It's like when you see something that's on a hits a really, I mean, it just gets sold off really bad. I'm not saying to just jump in and try to catch the knife, because that's not gonna work neither. But you know, you draw some lines, you kind of get an idea. Okay, and if it holds that support for a certain amount of time, and you read the news and you follow up with the company, and you do your DDs, and you know, all those things that are important, then you should be successful. But I mean, with Apple, man, a blind man could go in, you know, and still make money on the long term. I mean, so as of right now, investing, like for example on Tesla, see Tesla, see Tesla, see Tesla's, it's super overbought too, man. But ah, I don't know. I just think it's too toppy for investing. I don't even see myself investing for the long term on that. Neo is another one that was like, you know, we got a gap right there. It's gonna get filled eventually. So now all these companies, the EVs are all hype right now. So I mean, I'm not saying not to invest in them, but I wouldn't invest in them right now. For swing trading or day trading, yeah. See, this is a powerful setup right here on day trades. See how? Let me give you guys one quick breakdown here. In hindsight, breaks the BWAP, boom. You're like, okay, I'm gonna jump in somewhere around here, right next to the EMA, correct? Starts grinding. You see that top? See how it got rejected with this candle? Boom, rejection. But it came down and it got support, broke through. What happens next? It breaks through, right? And this is the reason why you don't short sell and keep things like that, because you can increase. I mean, can you actually hold from $10 to, that's 23%. So if you have $20,000 in there on a stock, right, on the short side, minus 20%, that's $3,000 loss. So you know, no, no, that's what I'm saying. It's not, no. I mean, anybody with a brain would be like, hell, they get panicked, so they automatically would just sell. I know they would. Um, this is a prime example of why if it starts breaking a resistance, if you're shorting, you got to be careful. And the same way when you're when it breaks down, you're like, oh, it's just touched it, but it's not really, you know, doing much. Well, it just can confirm it on you, and then just make, oh, it's gonna get top down. It's gonna find a support. It's gonna find a support. Let me show you guys an example here on the short side. Now this is when this right here is where it could go really bad if you're a short seller. This is not just short seller; it could be a long position as well, because at the end of the day, the stock could go down. I mean, well, technically the stock can go down all the way to zero, and you will only lose what you invested. But it's less likely for that to happen on a stock. But the upside for a short seller is massive. I mean, you're talking about massive. I mean, this is a prime example of how you could lose all your money in one day. You not just lose your money, you could owe money, you know? And this is a really good example of a short seller, you could lose everything. SPI, right? Right there. Short seller. Oh, okay. Well, I'm going to short. They shorted right there, right? At 423. Oh, yeah, it's the top for sure, right? Starts grinding. Boom. Oh, it shouldn't, it's already up 100%, 140%, 200%. It can't go any further. Wrong. Wrong, because guess what? Oh, yeah, he gets a little confident, oh, yeah, it's coming back down to, it's already for sure. Wrong. You keep getting, squeezed, and every squeeze you're like, holy moly. Just less money in your pocket. Boom! It goes from 473 to 550. That's $1. Let's say you had 1,000 shares, you lost $1,000 right there, like that, in seconds. Well, if you're like, I'm already in deep, why not? Nope. It goes to 8. So now you're down $4,000. And they give you a breather. It comes back from 9 down to like 7. So you're like, oh, okay, I'm only down, I don't know, $2,000. Wrong, because it keeps grinding. You're like, oh, God, no, it's going to come down. It's going to come down. It's going to come down. And it just rips through your face one more time. Just rips through your face. 1270. How long can you hold it? Tell me, how long can you hold it? That would have been putting you almost at a $10,000 loss already. And that's not where it stops, though. It could keep on grinding, baby, all the way 24. So if you would have shorted this stock with 1,000 shares, right? Just 1,000, all the way from $4, 443, correct? All the way up to the short side, all the way up here to $46. Not saying it kept it, but how long are you willing to hold it? That's the thing. How long are you willing to hold that hot potato? Dude, that was 1,000%. That's 900%. That means if you would have had $1,000 short in that stock, 1,000 stocks, you would have had almost like a $40,000 loss. That's crazy. So, I mean, you know what I'm saying? The only thing you could have lost if you would have been long would have been 1,000. If you would have bought 1,000. No, I mean 4,000. So with that, being said, I'm just basically breaking down the mentality of how I do things, why I take trades, how I take trades for the short, long term, or investing. And I'm basically showing you guys exactly, what I do. And the only way you could actually, gain some experience, it's you watching others and also, practicing. Because I can tell you the recipe, but if you don't follow, if you don't practice it, at the end of the day, it really comes down to emotional control. If you have no emotional control over your emotions, guess what? More than likely, you're not going to be successful because you're not going to be disciplined enough to follow the rules. Are you going to be disciplined enough to cut your losses? Are you going to be able to be disciplined enough to cut your losses when you are going short and you see that the trend is going against you? Take the loss and walk away, because it can get you wrapped up really fast. Luckily, TD Ameritrade wouldn't have let me short something like this, and I wouldn't want to be short in a stock that's moving up 130% because of that. Because I've seen so many stocks move up so massive, and they don't even give them time to sell. They don't even give you time to sell. That's the thing. They don't give you time to sell because it just keeps getting halted every time. Halt. So, no. I'm not shorting stocks that are under $2, $3, $4 like that. No. No, I cannot afford a loss like that. I'm on these stocks. I go long, baby, every time. Long. Let's go. The most I could lose is my investment, but it's going to take a long time for me to lose all that money because it's not going to go to zero overnight. But with that being said, that's basically how I look at things, how I invest. If you have any questions, feel free to ask any questions down in the comments below, and leave a like. Let's grow this channel together. I'm telling you guys, my strategy, basically how it works. And I'll upload maybe 1 or 2 videos here and there where I actually do take the trades live. Well, not live, but I'll record them and then I'll upload them. I can't do that every time because those videos are just kind of long, and it takes a lot of time to upload them and stuff like that. But eventually I do want to be able to get to like where I'm doing it live for maybe 30 minutes or so. But as right now, I don't have that much time to be able to do that because I still have a full-time job. But when I do, one day I will. Yeah, that's my goal, to actually, put them up. I mean, do live trades so you guys can look at my real thought process, how I'm taking trades and stuff like that, so you can learn more. I mean, though I'll give you one of the biggest secrets in trading is this right here, the level two. If you look at the level two, man, I'm telling you right now, this is where you understand. This is where you know where is the direction that is headed to. I mean, if you're able to read the level two for longer periods of time, you're gonna make money. So this is what's made me very successful, being able to read the level two, look at the ladder, time and sales, and if it's above the VWAP, and if there's news, all that things are matter. The patterns as well, you gotta look at. So with that being said, I'll leave you guys for another video, and I'll follow up with you guys on another video of how I do things, and you know another strategies that I got going on. So all right, I'll see you guys.